Welcome to Talk Finance. My name is Meet Kevin. I'm just kidding. My name is John and we like to talk finance here. I like stocks that pay a dividend. If the stock pays a qualified dividend, even better. But when I look for stability outside an ETF or index fund, I look for a REIT. A REIT stands for Real Estate Investment Trust, in case you didn't already know that. The only real issue most people have with REITs is that they are taxed as regular income, and let's not forget, price appreciation is not as high as a growth stock or any other speculative stock you might find. But they do pay better dividends than ETFs and index funds. Before we continue, if you could hit that like button, it would really help out the channel, and while you're at it, you might as well hit the subscribe button. As a thank you, here's a picture of a cute duckling. Okay, let's get right to the dividend REIT I keep buying anytime it goes near the $30 mark or under, and that is STAG Industrial. What is STAG Industrial? To put it simply, STAG is a real estate investment trust focused on the acquisition and operation of single-tenant industrial properties throughout the United States. One example of a tenant they lease properties to is Amazon, which investing in STAG is like investing in Amazon's landlord, if you think about it, which recently doesn't seem like such a good idea, but Amazon is just a small part of their business. STAG is diversified to make sure that one company isn't responsible for most of their revenue. Their current share price at close on Friday was $33.14, and it's down 2% from a month ago, but up 1% this week. With a market cap of $5.96 billion, their portfolio includes over 559 buildings in 40 states with approximately 111.5 million rentable square feet. I know what you're thinking. Seems like the dividend doesn't quite make up for the price since year to date it's down almost 30%. But so have many other stocks, REITs, and ETFs. And if you would have just invested in the REIT 5 years ago, you would be up almost 19%. And that's not even counting dividends. And if you would have invested since this REIT went public in 2011, you would be up 170%. I do want to remind everyone at this point that past performance does not guarantee future results. So although STAG hasn't moved much, it seems to hover and fluctuate between $30 and $40. So if you are looking for a long-term play that will continue to pay you dividends while price remaining pretty stable, then STAG could be for you. Did I mention that STAG pays its dividend monthly? That's right, every month they pay their current dividend of 12 cents a share. There is a downside though. They haven't really raised their dividends since 2019. It's also important to note that STAG has not missed a dividend payment since 2011. And although there is a lot of companies such as Realty Income that have been paying dividends way longer than that, STAG did not exist prior to 2010. 84.1% of STAG Industrial shares are owned by institutions, and 1.2% of shares are owned by company insiders. This means that hedge funds, endowments, and large money managers believe this stock is poised for long-term growth. Having such a large number of shares be owned by institutional investors would usually be a good sign that the stock is stable or that there's a huge upside potential. But if the past 2 years have shown us anything, is that although institutional investors have a lot of power to move a company, to move a company's share price, it is not enough to make it a safe bet anymore. So what are analysts saying about STAG Industrial? Well, as we mentioned, STAG Industrial currently sits at $33.14 and has been in a similar price pattern of the $30 to $40, and analysts believe that in the next 12 months, STAG will end on the low end at $33 and on the high end at $42, with a median price point of $35. On CNN Business, 4 analysts consider it a buy. 3 say that it will outperform. 3 are telling you to hold, and 1 analyst believes STAG will underperform. If you go over to Webull and see the price analysts, you will see that the same holds true, except the median price changes to $36, which is $1 more than the CNN Business analysts. I myself do hold shares of STAG and buy anytime it hits $30 or under, but I make sure to limit my buys to not make it the largest investment in my portfolio. Although I like REITs and I have a large amount in STAG, I like to diversify my portfolio to get dividends from different markets. I know STAG is not the best REIT out there, but I do think it's growing as they buy more and more commercial properties to rent out. And that can be a huge benefit in the current market as industries try to bring manufacturing and merchandise into warehouses in the US. Although STAG is still down this year, it isn't lower than most of the market was. But STAG has been paying dividends in this market, and price, even on red days, has stayed consistent. I dollar cost average into STAG, which has kept my overall price on the lower end of their range, making my investment in STAG stay green. I think we should be cautious and always make sure you are diversifying your portfolio. With rising interest rates, we don't know what the balance sheets will look like for some of these companies that might have to borrow money in the near future. But the great thing about REITs is that they do have to pay out 85% of their revenue, which means they are holding cash. If you found any value in this video, please remember to give me a thumbs up and smash that like button. Also, if you could subscribe, that would mean a lot and you will help build and grow this channel. Until next time, see you guys later.